From New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Westin. Let's start with the markets again today. Abigail Doolittle is here. And Abigail, they opened down a little bit, but they seem to have come back.
Very similar to yesterday, David, and I think that it still has to do with the fact that we're going into the end of the quarter, the best quarter for the S&P 500 since 1998. So managers may just want to lock this one in, cruise control. So relative to the major averages today, we do at this point have gains. To your point, though, earlier today, the futures have been slightly lower, and on the open stocks had been lower, but right now another solid gain for the S&P 500, up about 0.8%. The tech-heavy Nasdaq doing even better because tech is one of the top sectors. Interestingly, gold at one point back above $1,800 per troy ounce for the first time since 2011, hovering around those levels. So it's interesting to see both haven assets and risk assets rallying, helping both, David, the Bloomberg dollar index, the dollar down for the first time in 5 days. All of this on not really a lot of new fundamental news. Consumer confidence was a bit better, but of course the virus data news continues to be worrisome. So again, investors, it seems as though they're really looking to lock this terrific second quarter in, David.
Yeah, Abigail, as you say, Consumer Board came out with some good numbers on consumer confidence, which is certainly good news for us. At the same time, we're starting to get a trickle in of some earnings information, right? We've got a couple earnings already. We're going to get FedEx after the bell today. What are we looking for? Well,
you know, relative to some of the earnings that have come out, Micron yesterday, the chip company, they put up a very strong quarter. They also boosted the outlook. That's positive. Xilinx, the semi-cap equipment company, they pre-announced the upside, so very positive, and perhaps a tell on what we could see in July. However, relative to the quarter that was, it's such a stunning quarter, David. I just want to break it down super quickly because the S&P 500 up about 18% this quarter, the best quarter again since 1998. Treasuries after the huge quarter in the first quarter, relatively flat. But where we saw huge gains as well, David, investment grade credit, high yield credit. This, of course, on that Fed support, buying outright corporate bonds, and of course some of those ETFs. And then again, I was mentioning gold having a strong day. It's not just today, David. It was the quarter up about 14%. The precious metals, the best quarter since 2016. And credit, I need to mention, the best quarter since 2009. So it's going to be very interesting to see whether some of these early tells on the earnings season will continue into July and whether the third quarter can be as strong as the second quarter. Probably unlikely, but right now there is a bit of an optimistic feel despite some of what is happening around the virus here in the U.S., David.
Yeah, it's quite an extraordinary quarter, no question about it. Thank you so very much to Abigail Doolittle. We want to turn now back to that virus, which is affecting the markets and so many of us every single day. About 40% of America now has really slowed down on reopening the economy because of concerns about the coronavirus. For an update on exactly where we are, we welcome now Dr. Mark Mcclellan. He is the founding director of the Duke-Margolis Center for Health Policy. So, Dr. Mcclellan, thank you so much for being with us. Give us your overview of where we are. We have actually testimony coming up from Chair Powell. He's going to say, you know, we really got to get this virus behind us. How are we doing on that? Did we come back too fast?
David, we do need to slow down, and we need to take some further steps to get to containment. The trends that we're seeing in many parts of the country are really worrisome. I'm particularly concerned about not just the increase in cases, we're at record numbers of cases, but also the increasing level of hospitalizations that's getting to the point where it's putting real stress on many healthcare systems around the country. And the further worrisome thing here is that it's probably going to get worse before it gets better. It takes some time for the steps that states are taking now, pausing reopening, taking some further steps towards containment, for that to have an impact on hospitalization. So 7 to 10 days. So the trends will probably get worse before they get better, but I'm glad to see the increased attention to states and hopefully increased attention from the public about steps that we can all take to slow down the spread of the virus.
Well, so give us a prescription, if you would, Doctor. What do we need from the federal government? What do we need from the states, the local government, to really make sure we get to what you called containment?
So from the federal government, I think more support. So we're not where we've increased testing a lot, but we don't have the level of access to rapid testing for people who have symptoms, especially in many high-risk communities with lower-income populations, minority populations that have been really hard hit. So increased testing and support for containing outbreaks in those communities. Also, more support for healthcare providers, not just for the surge in hospital beds and ventilators that's needed, but healthcare professionals can play a big role in helping to contain the outbreak by helping more with testing, by providing counseling. That's who people trust. They have a lot of capacity to do that we're starting to see being used around the country. And finally, there are going to be some further steps that businesses need to take. We're working with the Rockefeller Foundation and others on good testing protocols that can help contain outbreaks, especially in high-risk business settings like in healthcare, nursing homes, and places like that.
Dr. Mcclellan, what have we learned about this virus thus far that will help us really direct the resources to where they need to go? Because not all treatments are equally effective. Where do we need to be directing more resources and maybe less resources in other respects?
Well, David, I think there is some good news on treatment. The remdesivir, an antiviral, is becoming more widely available. It's still going to be in shortage for the next few months, but hopefully the federal government's working with the company is going to take some steps to ramp that up. And I think there's a good lesson there for other promising treatments in development, like some of the so-called monoclonal antibodies that can potentially neutralize the virus, synthetic antibodies to fight the virus. I'm hopeful that those treatments are going to work. They could be available this fall. I'm concerned that we're not manufacturing enough of them. This pandemic is all about scale, and just like we're trying to plan ahead on vaccines and manufacture a lot before we even know that they work, we need to take the same steps with some of these other therapies that could help. There is some good news in all of this. More people are surviving, and we're getting better at treatment, but it's still going to be putting a big load on our healthcare systems for a while until we're able to really respond at scale with better treatments, and that's going to take place over months.
Doctor, you're a real expert in the economics of healthcare, and using that expertise, you were on the Council of Economic Advisors. You were also a Deputy Assistant Secretary of the Treasury. Using that, what incentives should we be giving to insurers and providers to make sure this is working the way it should?
It's a really good question. I wrote recently with Scott Gottlieb, another former government official who knows something about economics too, about paying healthcare providers differently. You know, they're trying to reopen too, so people can get access to the elective services that are really important in many cases that they've put off, getting diagnosed for cancer, getting their heart disease or other serious conditions managed. And that's really important. But we also need to pay them in a different way to try to do more of these procedures and services at home or in the community so that there's less risk and less crowding in some of the stress hospitals, and help them get more focused on engaging with containing the pandemic. So I think paying healthcare differently is very important. And just as a basic economics here, if people aren't confident about going out, and many people aren't, we're seeing the numbers go back down with these surges, it's going to be hard to have a sustained economic recovery. It's going to be hard for businesses to stay open if there's a real risk that their workers are going to have a COVID-19 case or an outbreak in their business. So this kind of investment to help us contain the pandemic, both at the public health level, governments, and healthcare organizations, is really important for getting to that recovery as quickly as sustainable recovery as quickly as possible. And David, I'd also add, just there are 3 or 4 or 5 things that if everybody did it, we'd contain this. So the distancing wherever possible, the masks, if you're close to others, and try to limit the amount of time for that, the hand washing, staying home if you have symptoms until you get a test, and if you've been close to someone who's positive, staying isolated until you find out you don't have it. If we did those things, and we need to do more to support people in doing it, we'd contain this.
Dr. Mcclellan, even as we've been speaking here, Dr. Fauci is testifying up on Capitol Hill, and he's saying some fairly alarming things, saying that the infections could more than double if they're not controlled, and we could see 100,000 new virus infections a day, which is very alarming. But I want to specifically focus on one thing, which is the disproportionate effect on the minority communities that we've seen. Telemedicine is a wonderful thing. I'm not sure it's available to some of the people who need it the most in the Black community, in the Hispanic community.
Yeah, it's a real concern, and for the communities that have been hardest hit, we know what needs to happen there. We need to do a more aggressive job of making tests available, of helping to contain outbreaks when they occur, of recognizing that it's harder for people, including many frontline emergency essential workers, people who are involved in grocery stores and public transit, et cetera. They can't isolate as easily. So we need to help out with some housing supports potentially. There's a whole playbook, which we and others have recommended, which can be implemented in these settings to help with this this differential impact in the minority and low-income communities. It's a real concern that we need to address now.
Doctor, thank you so very much for being with us today. It was very helpful. It's Dr. Mark Mcclellan. He's the founding director of the Duke-Margolis Center for Health Policy. Coming up here, we're going to get to talk with the third-ranking Democrat in the House of Representatives, Representative Jim Clyburn, about how the fiscal stimulus funds are being distributed, how we're trying to equalize America. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. It's time now for First Word News, and for that we go to Mark Crumpton.
David, thank you. The nation's top infectious disease doctor says he's quite concerned about the increase of COVID-19 cases in states like Florida, Texas, Arizona, and California. Dr. Anthony Fauci told the Senate Health Panel today that some states reopened too early and skipped checkpoints that were part of CDC guidelines. Still, Dr. Fauci said he was, quote, aspirationally hopeful that a coronavirus vaccine will be ready early next year. People who attend an Independence Day celebration at Mount Rushmore with President Trump will not be required to practice social distancing. South Dakota's Governor Kristi Noem tells Fox News that free masks will be available but not required. According to a transcript compiled by Bloomberg, Governor Noem says if people have concerns, they can stay home. President Trump has opted to not wear a mask during public appearances. European Union governments don't think the U.S. response to the coronavirus pandemic is sufficient. They've extended a travel ban for American residents. They won't be allowed to enter the EU for non-essential reasons. Bloomberg spoke with the CEO of Carnival Cruise Lines.
Europe is more comfortable at this point with the levels of, the spread of the virus east. So it's not surprising. A couple of weeks is not a dramatic amount of time, so we'll see what happens over time.
And the EU decision will be reassessed every 2 weeks. A divided U.S. Supreme Court has strengthened the rights of religious groups to get public funding. The justices reinstated a Montana scholarship program that allows state tax credits for private schooling. By a 5-4 vote, justices said the Montana Supreme Court violated the Constitution's Religion Freedom Clause when it struck down the program. Parents whose children attend religious schools sued to preserve the program. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. The pandemic and the economic aftermath have hit minority communities particularly hard. We welcome now Congressman Jim Clyburn of South Carolina. He's House Majority Whip, as well as the chairman of the select committee appointed to really make sure that the funds appropriated under the CARES Act are properly spent. So, Congressman, thank you so much for being here. I really appreciate it. Give us a sense under the CARES Act, before we get to further funds that may be coming, were we able to direct those to some of the minority communities that need them the most?
Well, thank you very much for having me. To answer that question, you have to answer it in two parts. The first CARES Act, no, we did not. We did not put the protections in there that needed to be in there in order to make sure that the money's got to where they were really needed, make sure the money got to small businesses, down to Main Street, and also on the paycheck protection part, whether or not people working in these smaller businesses were able to get their paychecks protected. I hear from people today that still have not received their monies. So there is some efficiency problems with that. As it relates to the second CARES package, what we call the emergency bill, we did put protections in there. And we allowed for community development, financial institutions, for credit unions to participate, because so many of these small businesses do their banking with these entities. They aren't non-banked, as people say. They just don't bank with the big corporations. So the protections are there. So now we're hearing that there's $130, $140 billion that is not going out of the door. I'm not too sure that they don't need to go out of the door. The question is whether or not we are focusing on Main Street in order to get that done.
So, Congressman, who's going to decide on that? I think I read it was $134 billion. You say $130, $140 billion under the PPP, the Payroll Protection Act, hasn't gone out the door. Who's going to decide who gets that money?
Well, it's always been up to the Small Business Administration and to the Treasury Department to make those decisions. My job as chair of the Oversight Committee is to step in to see whether or not what they decided to do meet my three-pronged test. Number one, was it done efficiently? Number two, was it done effectively? And number three, was it done equitably? So that's where I come into the equation. I don't have a thing to do with sending the money out, but I do have a lot to do with oversight of how the money went out, where it went, how it was spent, and who got the benefit.
So, Congressman, that's the money that's already been appropriated. There's a lot of talk that this month, in the month of July, we're going to have another round of fiscal stimulus. Do you expect there to be another round? How big will it be?
Well, we were anticipating that. The Speaker Pelosi made it very clear. That's why we passed the HEROES Act, $3 trillion. And a lot of people recalled at that number, but we were told by Chairman Powell, Chairman of the Fed, when we passed the act, the $3 trillion may not be enough. So the fact of the matter is the House has done its job. We have protected local, state and local governments, almost $1 trillion appropriated for them. It's now time for Mitch McConnell to do his job. Walk out of that graveyard and pass this legislation that we have sent in there. He may not want all of it, but I think he owes it to the American people to look at that expenditure and do what is necessary for people to stay vibrant in this economy.
Yeah, he may well owe it to the American people. Also, there are elections coming up in November. Is there some pressure on both Republicans and Democrats to really get some stimulus, given the fact we still have something like 20 million people unemployed in this country?
Yes, we do. And of course, we on the House side can do our jobs. There's very little that we can do to make the Senate do its job. I would hope that Mitch McConnell would wise up. And if not, I hope the people of Kentucky will wake up.
Yeah, well, that's pretty directly said. Finally, just give me one moment on this report that perhaps Russia was offering bounties for people in Afghanistan to shoot American soldiers. As a member of the leadership, the third-ranking member on the House, on the Democratic side, what are you going to have to do in order to find out, get to the bottom of that?
Well, we have some members of our leadership meeting with the White House today. I'm hopeful it will be a productive meeting. I am hopeful that the appropriate committees, the relevant committees, I should say, here in the House, where we do, in fact, make determinations as to whether or not there's a hearing and who should be called. I would hope they would step in and do what is necessary to get to the bottom of this. There is absolutely no way that we can be silent with this kind of reporting going on. This man has already said he didn't know. And there are some people who said they didn't tell him. Well, the fact of the matter is, if you've got something this serious involving the men and women who are there trying to protect this fragile democracy that we have, and if somebody is putting the bounty on their heads. We need to find out about it. And if they didn't tell the president, all the more reason to get this White House out of power and put people there who can, in fact, inform our commander-in-chief as to what the real facts are. And hopefully a commander-in-chief who will know how to respond outside of his personal aggrandizement and do what is best for the American people.
Congressman, it's a real delight to have you with us. Thank you for spending your time with us. That is Congressman Jim Clyburn of South Carolina. He is, of course, the House Majority Whip. In the meantime, coming up shortly, we're going to hear from Chair Jay Powell of the Fed, as well as Secretary Mnuchin, testifying before the House Financial Services Committee. We're going to bring you that live as it comes, but before that, we're going to talk to Michael Feroli. He is the Chief U.S. Economist for JPMorgan. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. A few minutes from now, we're going to be hearing from Chair Jay Powell as well as Secretary Mnuchin appearing before the House Financial Services Committee, and they're going to be talking about exactly how the recovery is going and how the stimulus is being spent. To take us through that economy and give us an update on where we are, we welcome now Michael Feroli. He is JPMorgan Chief U.S. Economist. So, Michael, give us your take right now. Where is the U.S. economy?
So it's at a pretty interesting juncture. I think about a week or two ago, most people would say we were on what looked to be a pretty steady course of recovery as things were reopening. Certainly the indicators we saw for May and early June all looked pretty favorable. Obviously, over the last week or two, we've seen this resurgence in cases also lead to some worrying indicators, high-frequency indicators suggesting that is leading to a slowing in terms of consumer spending and hiring and so forth. Maybe it doesn't show up in the June numbers, but I think July is going to be now a little bit up in the air in terms of whether this recovery is really on track. So I think we're at an interesting juncture right now where the narrative, I really think over the past week or two, feels a bit different than it did, let's say, in mid-June.
Well, exactly, Michael. It feels at least like it's not going to be just a straight line. There may be some back and forth here in the reopening. We have something like 40% of the country now that's at least slowing down their reopening. If we continue on this path until the time we get a vaccine, what does that say about the recovery overall in the longer term?
Yes, I think even with a pretty steady reopening, we had always anticipated that the recovery would be incomplete, that there would be some lasting damage or at least long-term damage in terms of businesses shutting down, work relationships being permanently or at least disrupted for quite a while. And that's under the, I think, more optimistic scenario. I think now with the reopening looking more in doubt, that really calls into question even that more optimistic scenario. So I do think it adds concern here that the second half of the year, again, it shouldn't be hard to get a positive GDP number for the third quarter, but whether we're going to see – look, I think what's going to be really interesting is the July payroll report. Obviously, this coming Thursday, we're going to get the June payroll report. That should be a good number, unless, of course, we get head faked again like we did last month. But July, I think, now really looks like it could be questionable whether we're going to return to or stay in this realm of really big employment gain, and that if that falls flat, I think we really are going to have to think deeply about the nature of this recovery, and I think that actually kind of leads into this hearing today, which is there is a risk here that if Congress sees what's a strong stock market, two really good payroll reports, they may get lulled into a false sense of complacency. And there is a lot of stimulus that is fading here as we head into the third quarter. And if we do see a second wave or a stubborn first wave, however you want to characterize it, hold back the economy, then we may see that even the massive amount of stimulus we have already had is not enough. So I do think, this potential weakness in the economy is an interesting topic as we listen to Powell and Mnuchin today talk about what they're going to get grilled on. But I do think it's an interesting backdrop for today's testimony.
And Michael, there's the further question, at least for me, of what could be holding back the economy. Is it what mayors or governors or even the federal government says what we should do? Or is it, on the other hand, people just not being willing to go back out? If we have these reports of increased cases in Texas, Florida, Arizona, we know the states, and no matter what the governors say, no matter what the president says, is there some dampening effect on the consumer who says, I just don't want to go out and risk it for me and my family?
Yeah, I think that's a great point, which is I really think it's the latter, which is to say I think there is evidence, a growing body of evidence that it's not so much what the governors and mayors say, it's what consumer behavior and their concerns and their fears. So if you look at states with very similar characteristics, one having stay-at-home, the other not having stay-at-home, you see similar behavior in consumers, right? So yes, it is interesting and notable when various governors put restrictions on activity, but really it's the consumers who are doing putting the restrictions on themselves. At least that's the evidence, I think, that the best evidence out there. So it is. This is really out of the hands, I think, of the elected officials, at least at the state and local level. And this is really, the virus is in charge here, and if the virus continues on the path we've seen recently, consumers are going to retrench no matter what their mayor or governor says.
Well, it may be out of the hands of elected officials if this plays out the way it is at the moment. That could always turn around. Is it also potentially out of the hands of the Fed and to Jay Powell? Because if, in fact, it's a matter of consumers not being comfortable with their own safety, I'm not sure what the Fed can say. A lower interest rate isn't going to get me to go out of my house if I think it's dangerous.
Yeah, that's absolutely right. And I suspect you will hear something like that from Chair Powell today, which is that, they're going to always continue to try and do what they can do. But if things get bad or get worse, I guess, it's really in the hands of Congress to write checks. And Congress has the power to spend. Fed only has the power to lend. And so I think that will be the message from one of the messages from Powell today, because as you say, yes, the Fed can try and push interest rates down a little bit further from where they are now. But I think, as most people know, interest rates are already quite low. They have no intention to go into negative territory. But with 10-year rates at 60 to 70 basis points, there's only so much you can do with things like QE and forward guidance. So without that kind of stimulus, it really turns to Congress to extend or add more funds to some of these programs which are expiring. And I strongly suspect Powell will turn the question back to Congress to tell them that ultimately a lot of the responsibility is in their hands.
So, Michael, let's turn it back to Congress now. We're talking about yet a fourth round of fiscal stimulus. People are talking about something in the month of July. Republicans are not in a big rush. Democrats are. We're here from $3.3 trillion all the way down to $1 trillion. As an economist, what do you think is needed, and particularly, where does it need to go to? What if you were targeting fiscal stimulus, where would you target at this point to help the economy the most?
So one thing I think is clear is that the household sector really benefited from fiscal stimulus in the second quarter, and that's in the form not only of the stimulus checks, but the more generous unemployment benefits. And that, I think there's some strong evidence that helped this May spending bounce that we saw. So if this virus takes another adverse turn here, the household sector may need more support. Now, that could be a second round of stimulus checks, some form of extension of unemployment benefits, but that certainly seems to be one area. Second area, state and local governments have received less so far in this episode than they did in 2008, even though they're facing arguably a larger shock. And then the third is small businesses. So the PPP fund, the Paycheck Protection Program funds, that ends today, I believe. And right now there's nothing set for further support for small businesses. And so I think, tailoring these programs to address the hardest hit households and businesses is going to be more challenging, right? Because under the CARES Act in late March, everyone was getting hit hard, and so it was kind of blanket support. And now, Congress may want to target it a little more, which is certainly reasonable, but it also makes it a little more difficult. But I think households, businesses, small businesses, and state and local governments are all, I think, going to see some shortfall in ability to spend absent further support, particularly if this virus continues to run in the wrong direction.
We were talking with Michael Feroli. He is JPMorgan Chief U.S. Economist. As we wait for the testimony from Chair Jay Powell and Secretary Mnuchin before the House Financial Services Committee, hasn't begun yet. It seems to be delayed. In the meantime, there is a headline crossing the Bloomberg that the FCC has designated Huawei and ZTE as national security threats, something that the president has been eager to have happen. Let's come back to the employment situation, because we do have the jobs reports coming out on Thursday, a day early because of the holiday this week. You mentioned July you think may be more important than June. There's a wide range in what economists are saying is possible. What are you projecting for this payroll number coming up on Thursday?
So we're looking for a 3 million gain in employment, which would be a little bit better than the 2.5 million we saw in June. And we do think that would bring the unemployment rate down from 13.3% in May to 12% in June. As you mentioned, there is even around our own estimates, I think we're certainly don't hold that with tons of conviction in terms of the point estimate. Clearly, the May number was a big surprise. I think the continuing and initial claims numbers certainly seem to, the signal from that a very important report does seem to be plagued by some of the administrative issues that have afflicted state labor offices. So we've had to really change our forecasting apparatus to rely on a lot more of the second-tier high-frequency indicators that I think also a lot of other forecasters are looking for now. But I think it's, I believe estimates run from about 1 million to 5 million. So it's certainly, I think we're prepared for a wide range of outcomes when we sit down in front of our Bloomberg monitors on Thursday morning. But as you say, I think as you allude to, most of the indicators suggest June was a good month. Some of those same indicators, though, have already started to look a little softer since the reference week. So the payroll report refers to the week that contains the 12th of the month. Since that period, a few weeks ago, we've already started to see some indication that maybe that vigor in the labor market is starting to wane a little bit here. So that's why I say the July report, I don't think it's going to be more or less important, but I think it could be a bit of a turning point, because I think after the May number, I believe most forecasters probably thought we were in for a string of several positive large numbers. But what we're seeing in many parts of the country with the virus coming back suggests that that expectation may have to be dialed back here, given how that may be playing out in the labor market. So, I think the May report did kind of pull forward people's expectations by a month of when that would occur, but the strong stretch of jobs. But now we're wondering how long that stretch is actually going to be. But certainly for this Thursday, we're looking for a positive number. If we don't get that, that would be I think a real disappointment.
Once again, we're talking with Michael Feroli. He's JPMorgan Chief U.S. Economist. And Michael, if you could stay with us, that would be terrific. We're waiting for the House Financial Services Committee to begin their hearings with Chair Jay Powell of the Federal Reserve, as well as Treasury Secretary Mnuchin. Let's bring in another Michael now, just to confuse me. Michael McKee, he's our colleague. He's our Chief Economics and Policy Correspondent. We have two Michaels. I'll try to use last names. So Michael McKee, as we look forward to these hearings when they get started, perhaps a bit late, what are we expecting the people asking the questions to be interested in?
Well, the ostensible reason for the hearing is to look at what they've accomplished so far under the CARES Act, what the Fed and the Treasury Department have done, how the money has been dispersed, $2.7 trillion so far, and a lot of questions about whether it was delivered to the right people and whether those who really needed help got the correct amount of money. So there'll be questions about that. The Government Accountability Office put out a report last week that suggested it's very difficult to trace a lot of the money, and a lot of mistakes were made in getting it out the door. Now, obviously, this was set up on a very quick basis. The speed was the paramount goal in getting the money out the door. So the two leaders will probably say, yes, we did make mistakes, but we're getting it under control. And then from the Fed's point of view, the lending programs that they set up, has that been valuable? Has it worked? A number of those lending programs haven't seen much activity, and Powell will point to those and say, this is because we set them up. We've brought spreads down, we've opened the markets up, and so at least that side of it, the lending side as opposed to the spending side, has gone pretty well. But I'm sure a lot of questions about how this has all been put together, and then obviously questions about what needs to be done next.
Yeah, Michael Feroli, have you been able to have any sense at all of what the PPP, that payroll protection program, has really done in terms of employment or in terms of the economy? It certainly went out the door a lot faster than a lot of people suspected it would. People said they couldn't get that much money out the door. They got a lot of money out the door quickly. Is there any way of judging what that's done for the economy at this point?
So I think it's hard to say with certainty what it's done for the economy. As you mentioned, it did get a lot of money out the door really quickly. It could have supported employment of up to around 45 million individuals, given the way it was structured. Now, what we don't know is how much of those funds that went to small businesses to support employment would those employers have been kept on anyway, right? So I think there is evidence, some microeconometric evidence that suggests that a lot of those funds went to employers who probably would have kept their employees on board. So it's probably a number much smaller than that 45 million individual number I suggested. But I think there is reason to believe that even if it's much smaller than that, it's still significant for the economy. And that may have been one of the reasons why, as I mentioned a moment ago, that May employment report surprised quite favorably, is that that happened, shortly after the PPP funds really started to trickle into the economy. So while we don't have a precise number on how much employment it did ultimately, how many jobs it saved, the fact that those funds are, going to be expiring over time is a downside risk for the employment outlook as we roll into the summer months, particularly if consumer spending isn't there to support those jobs. But certainly that was, one of the critical aspects of the CARES Act that they're going to discuss today. And, I think as Michael McKee said, yes, of course, there was going to be, when you rush that much out, there was going to be, some bad actors involved in terms of how those funds were used. But ultimately, as you, David, said, it went out the door a lot quicker than expected. And in that respect, it probably did support the job situation after we got through that initial shock in March and April.
Okay, Michael Feroli of JPMorgan, thank you so very much for being with us. It was really, really helpful. In the meantime, Michael McKee, if you could just stay with us now as we continue to wait for that House Financial Services Committee hearing to begin. It is about 10 or so minutes late at this point. We'll bring it to you live when it happens. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We continue to wait for the House Financial Services Committee to begin its hearings, where they're going to be asking questions of Chair Jay Powell of the Federal Reserve and as well as the Secretary of the Treasury, Steven Mnuchin. And as we wait, we turn once again to our colleague Michael McKee. He is Bloomberg Chief Economics and Policy Correspondent. So what are the congressmen going to be really interested in? What are they going to ask Chair Powell about? He's got a lot of programs. How many does he have up running? 8, is it now?
He's got all 9 programs up and running, David, although a couple of them haven't seen any action. But they did get the private credit program up, the primary credit program up, the one that would lend directly into American corporations by buying their bonds. That was announced yesterday. It is, in theory, operational. It'll take a while before we see how many they buy and how much they spend. But that could be a $50 billion program. The question is, does anybody need it at this point? Because spreads have come down so much, and you got to pay a 100 basis point fee to sell your bonds to the Fed. Is that going to get a lot of use at this point? We have seen the Fed in the secondary program, which was a big deal to the markets a little while ago, spent about $8 billion so far, not all that much out of the 25 that they had to spend, buying some bonds from some big companies like Walmart. But it's not like anybody at this point really has a problem getting credit in those areas. The question is going to be the Main Street program, and that's probably going to be the focus for the people up on Capitol Hill. It went operational about 2 weeks ago, but so far there haven't been any loans made. Is that because companies don't want to borrow at the rate the Fed is going to have to charge? Is that because everybody went out and got loans already? That's going to be an interesting aspect of the questioning today.
Yeah, clearly that Main Street program has been a problem, sort of a thorn in their side so far, because it took them so long to get it up and running. But on the other, even though they didn't actually buy too many bonds, I beg your pardon, Mike, I'm going to interrupt myself and you as well. We now can go to the House Financial Services Committee. This is Chair Maxine Waters, and they're going to be talking to the Chair of the Federal Reserve, Jay Powell, as well as Secretary Mnuchin.
From the start of the hearing, and I thank you. So without objection, the Chair is authorized to declare recess of the committee at any time. I want to welcome all members and our distinguished witnesses to the first full committee hybrid hearing being conducted by the Committee on Financial Services. As Congress breaks new ground with these remote hearings, I want to remind members of a few matters, including some required by the regulations accompanying House Resolution 965, which established the framework for remote and hybrid committee proceedings. First, I would ask all members on the web text platform to keep themselves muted when they are not being recognized. This will minimize disturbances while members are asking questions of our witnesses. Members on the WebEx platform are responsible for muting and unmuting themselves. The staff have been instructed not to mute members except when not recognized and there is inadvertent background noise. Members on the WebEx platform are reminded they may only attend one remote hearing at a time. So if you're participating today, please remain with us during the hearing. Members should try to avoid coming in and out of the meeting, particularly during the question period. If during the hearing, members wish to be recognized, the chair recommends that members identify themselves by name so as to facilitate the chair's recognition. I would also ask that members be patient as the chair proceeds, given the nature of the online platform the committee is using. In addition, the chair informs the members participating in person that in enforcing order and decorum in the hearing room, the chair has a duty to protect the safety of members. The attending physician provided the following guidance. For U.S. House of Representatives meetings in a limited enclosed space, such as a committee hearing room, for greater than 15 minutes, face coverings are required. Accordingly, the chair will treat wearing masks as a matter of order and decorum, and all members should wear masks. The chair has a strong preference for members to continue to wear masks, even while recognized. Members who do not wish to wear masks may participate virtually through the WebEx platform. Before proceeding to the hearing, I have one committee business matter. Without objection, 2 resolutions distributed in advance to all members' offices establishing committee task forces for the remainder of 2020 are approved. This hearing is entitled Oversight of Department of the Treasury Departments and Federal Reserve's Pandemic Response. This hearing is the committee's first quarterly hearing required by the CARES Act for oversight of the various facilities and programs under the Act. I would like to inform members that our witnesses have a hard stop today at 2 o'clock. I now recognize myself for 4 minutes to give an opening statement. Secretary Mnuchin, Chair Powell, welcome back. The pandemic continues to have a terrible impact. More than 126,000 people have lost their lives in the United States, and this past Sunday, there were 40,000 new cases of COVID-19, the highest number of daily cases. And so the unemployment rate in May was 13.3%, nearly 4 times higher than it was last May. All of the job gains of the past decade have been wiped out. Communities of color have been affected disproportionately, both by the virus and its economic impacts. The Centers for Disease Control reports that as of June, Black and Latinx Americans are 4 to 5 times more likely than whites to be hospitalized for COVID-19. And half of all Black adults are not working. During the 2008 foreclosure crisis, we saw a similarly disproportionate impact on communities of color. This was followed by an unequal recovery, where white households gained the wealth they lost. Black and brown households are still trying to catch up. We cannot endure another unequal crisis or unequal recovery. Your agencies and Congress must do all that we can to ensure that history does not repeat itself. So, I want to thank both of you for your efforts thus far and for the ways that you have worked with me and my members of this committee, including taking my many calls to strengthen the implementation of the CARES Act. Secretary Mnuchin, you have used your authority to provide community development financial institutions, that is, our CDFIs, and minority depository institutions, our MDIs, greater access to the Paycheck Protection Program, including by setting aside $10 billion for them to lend to ensure more loans go to small minority-owned businesses. Chairman Powell, you have worked with us to reduce the minimum loan size at the Main Street lending facility from $1 million to $250,000 and to extend the length of the loans. You've also broadened the eligibility of the municipal liquidity facility to increase access to a greater number of cities and towns. The CARES Act has provided important relief to struggling families and communities. But as the pandemic has strengthened, so must our efforts. And so, with that, I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes.
Well, thank you. Thank you all for being before the committee and behind these salad guards that we've arranged for you. Good to see your smiling faces behind your masks. But I'm grateful that we're able to assemble. This is certainly a large undertaking for the second largest committee in Congress. And I do want to commend Chairwoman for those efforts so that we can actually have this hybrid hearing. I think it shows that Congress and our government are still working, even if we have to do so using technology. Thank you all for your response and your active response since this crisis began. So I want to say, first of all, I believe the Fed and Treasury's decisive actions prevented the worst of the economic catastrophe. But there's still much work to be done. It's important to remember this is not a crisis that was caused by irresponsible choices by any specific industry or corporation. What we've seen is the impact of a voluntary shutdown of our economy and an effort to save lives. The Bipartisan CARES Act directed both the Treasury Department and the Federal Reserve to stand up responsible programs that would have been unthinkable even months ago, and to do so quickly, and you have done so rather quickly. Now that many of these programs are up and running, we must be forward-thinking to seek solutions to return us to the roaring economy that we experienced right before the global health crisis. That means we need to understand the nature of what we've done and what we need to do going forward. We know the pandemic has touched nearly every aspect of our economy and every family. Facilities discussed today need to be similarly far-reaching and responsive to economic conditions, not political ones. And I know there are a number of programs that have been desired by policymakers to be company-specific or something like that. That's not the appropriate response nor commensurate with the law. Moreover, members are going to have a lot of questions about fiscal policy, which I think Secretary Mnuchin is best fitted to, and monetary policy, which Chairman Powell is best suited to. And I think the understanding of that is important for us as policymakers to experience at the beginning of this hearing, rather than to hear you defer to one another. Our role in Congress is to assess the effectiveness of existing programs, determine the goals for additional relief programs, and identify the appropriate entity to provide that relief. That's our role. Of course, we need to access the key programmatic data. And so I want to commend Secretary Mnuchin for coming forward with the type of oversight material in a massive, unprecedented way, with the type of loan level data that we requested in Congress, and to provide that in a transparent way. The thousands of pages of documents that you and your team have assembled for just this committee alone is staggering in such a short period of time. So I hope my colleagues will use this data appropriately so that we can assess these programs and make sure they're working. And so I do want to commend you, Secretary Mnuchin, for the delivery of the PPP program so effectively and so quickly. It wasn't perfect, of course, but it saved millions of jobs. And Chairman Powell, I want to commend you. You've made your word good in terms of action. And that builds confidence in the institution of the Federal Reserve, that your words actually are as good as action by the Federal Reserve. So thank you for following through on your word and your commitment. So I think there's positive news in terms of the assessment for this initial response. And I want to thank you for being here at the first quarterly oversight hearing under the CARES Act. Madam Chair, on a personal note, I would like to welcome back our friend and colleague, the ranking member of the Oversight Subcommittee, Andy Barr, from his family concerns he's been attending to. So thank you, Andy. We welcome you back.
Thank you. Thank you very much. I now recognize the chair of the Subcommittee on Oversight and Investigations, Mr. Green, for 1 minute.
Thank you, Madam Chair. Thank everyone. It is an honor to serve under your leadership, Madam Chair. The 2019 Home Mortgage Disclosure Act HONDA data were released last week and demonstrate that unequal access to credit on the basis of race and ethnicity remains the norm in America today. This is something that we can do something about. But there's a problem. Many of the people who have the authority and who are in positions to make a difference, they refuse to even acknowledge that the problem exists. I have the evidence. I have pictures from prior hearings. The one to my right asks, do you believe that discrimination in lending exists? One person has his hand up. He is with the NAACP. He is African American. The 4 Anglo persons on this panel refuse to raise their hands. These are the problems that we have to contend with. I yield back the balance of my time.
Thank you, Mr. Green. I now recognize the subcommittee's ranking member, Mr. Barr, for 1 minute.
Madam Chairwoman, before I deliver my opening statement, I rise to a question of personal privilege.